Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Wednesday, April 23rd, 2025. Today's episode begins with our headline, Can You Take Me Higher? When Blind Men Invest and Tariffs Fade. That's the question. Can you take me higher? My take on it is with my daily reminders. If you've read through those or have heard me walk through those items, you know that I see the S&P 500 priced like a Ponzi scheme. But like any kind of asset bubble like we saw in the stock market in 1929 or the Japanese stock market in 1980, as big as bubbles seem, they can always get bigger until they inevitably pop. That's just how I see this situation. So while it's possible that this tariff fading down to lower levels can get investors pushing markets higher, I mean, yeah, it can keep going higher. It can take us higher. And again, with all of my daily reminders taken into consideration, it would just be adding air to the balloon that is going to pop. But what do I know? I'm just a guy with a crystal ball. There are a lot of charts to talk about today. Not a lot, but important things in charts to talk about today. Before we get there, let's do the community topics. Still asking this question, what moves, if any, did you make today? It's been fascinating seeing what you guys are doing with your moves. For myself, I did not do anything. I sat on my hands today. I think it's likely I'll be getting out of my gold short as early as tomorrow. We'll talk about that when we get to the charts. Coming up, continuous tariff updates. I mean, what else is there really to talk about? And as always, thank you so much for watching, subscribing, commenting, and supporting. Speaking of the daily reminders, here they are fully explained in a link in the description. You can go read them on a website. Also, no changes in the crystal ball ratings nor the Robschild portfolio. The biggest story of today is probably in TLT. We'll get there in a moment, but we'll start like we usually do with the S&P 500 SPX. We closed 1.67% higher today. I will repeat, this does not look anything like any kind of bullish pattern yet, and I think that this trend line here, we're not even up to that point, which is a very strong one because it's long and it has a lot of hits on it. If we get there, it will likely be the top. That could end up being the place where we hit and then roll over to new lows. I am very curious to see if Mr. Market has enough gas in his tank to drive us higher. I am still very doubtful of that at this time. While the fear gauge, the VIX index, the pricing of options contracts, cooled off today by 7% of its value, dropping to 28.44. This is still very far above 20. And like I said yesterday, if I am going to believe that we're back into bull market mode, I need to see the VIX at least below 20. And as it stands, this still is in a pretty obvious consolidation phase. And honestly, the longer that we consolidate here, the larger the breakout can be. And since there aren't typically large breakouts to the downside in the VIX, I think that might be a decent reason to believe that we are still headed to higher highs in the VIX in the short term. The most interesting chart of the day, especially for me, because I have over 50% of my own portfolio exposed to basically TLT and funds 0Z and TMF, along with some calls on TLT itself. I woke up with a smile on my face seeing this come out. I mean, holy moly. TLT going up 3% in one day when it before market open, it was something like 2.8%, and then we peaked at a 3% gain in TLT before selling off through the day. The institutions that recently sold me my calls on TLT certainly can't have that. Their short gamma exposure can get blown out, and so that's why I think we had such a driving down day today. This can continue a little bit lower, but we are now broken above I mean, we're still closed higher on the day. Even with this giant red candle here, we're still up on TLT by 1%. So yeah, sort of forced into like mean reversion, I guess. The players that control this market want to see an orderly market. They don't want to see a jump like that. They can't handle it. So I can maybe see a situation where we get into more gentle higher lows, higher highs from here, but I'm not really sure. Again, I would prefer it to get back down to this gap fill area, especially at this point, especially after such a day like today, because this gives the bond bulls a lot of confidence. So if I'm able to free up cash and we happen to get back down into that area, I'm still planning to load up more in that area if I'm able to. It's always a good idea to take a look at the MOVE index, the MOVE. This represents, it's basically like the VIX is of the S&P 500. This is the volatility of bonds. So we had a little bit of vol fade today, which simply says that it's unlikely we'll get another big knee-jerk move, at least not a sustained one. So what I'm sort of seeing here like a little bit more fade off in the price of TLT before finding higher highs and higher lows. That's what I think. One market that puts a pretty big dent in any kind of hope for further upside in stocks is crude oil. Crude oil is not convinced. This candle to me looks like it's almost engulfing of the last four days, although it only really engulfs the past two, with a red candle going down with everything else going up. If you can really take me higher, I want to see a little more strength in crude oil here. And we didn't see that today. Quite the opposite. A drop of 3% on the day. But Robschild, you said yesterday that fear was unopposed. Well, the CNN Fear and Greed Index still agrees with me that we are in fear mode. I mean, we're not in extreme fear mode anymore, but this is what happens in bear markets, bear market rallies. We get into fear. We might even touch into greed before going back into extreme fear mode. A phrase I like to think of in these kinds of scenarios too is you got to kill all the bears before markets can get bearish. It's because if everyone's bearish, I mean, the put-to-call ratio was high, like I talked about yesterday. It was a spike. And, if you have too many people on, potentially profiting from the downside, then it pretty much has to go. It's sort of forced up before we can make the next move down. We got to kill the bears before we can get the next leg down. Maybe that's what's going on here. There is one thing that I'm going to say adds to the bull case that gives them a little bit more legs. Actually, there's two things. First thing is that the Fed funds futures is now pricing in only 3 cuts, 1, 2, 3 for the rest of 2025. It's a small difference. We only pushed the next cut out to January of 2026, but still this market is pricing like a little bit less chance of like emergency cuts, for example, is sort of the way I'm viewing this. Add to this another chart that caught me off guard today actually was HYG, this fund holding high yield corporate bonds. We'll see what the actual spreads look like tomorrow, but on the open we got back into this range where I was saying how unbelievably tight credit spreads were, and it did sell off throughout the day. But when this is smarter money here. This is the bond market. These are, set payments. These aren't, junk bonds don't rely on other people to bid them higher and higher. They are priced based on credit risk. And so the only way this market can go higher is if markets perceive lower credit risk. And so we did see a little bit of that today. So that does actually add some legs to the bull case in stocks. Next, with perceived less risk, and probably Trump firing Powell might be the biggest reason gold is finally cooling off here. Not sure. Chart-wise, this thing has been getting crazily overextended. I will exit all of my short at this point around 31.50. I don't think there's much holding gold where it currently is, and structurally this is looking like a blow off top. So I expect to get there sooner than later. I also still am, like I said, no changes in my portfolio. I'm still short with a pretty big short position on semiconductors. Looks like we are wanting to reach up to this line. A lot of pros are actually going to short here. If we get to this point, and there's definitely going to be resistance. So at the very least, if we start having a fight here, this could mean that it wants to break out higher. But my expectation is that we might get there, we might not, and then I think we're going down to a new low in this. And this is based off of a longer term head and shoulders top that has played out pretty clearly. Combine that with my macro views of the fact that we don't need an actual infinite amount of semiconductors, along with the tariffs putting a dampener on things. It's like everything makes sense for this to head lower, but again, I'm just a guy with a crystal ball. One more chart I wanted to share is the 10-year break-even inflation rate. Very, very interestingly, over the past 2 days, actually rising. While this is happening, at the same time we have gold dropping. Well, I thought gold was supposed to go up if inflation expectations were rising. Also, potential easing of tariffs. Well, I thought, that would make the expectation of inflation to actually drop and not go higher here. Add to this that bond yields have, they dropped hugely today before going back up a little bit, but still dropping. That's also supposed to lower inflation expectations. So why is the 10-year break-even inflation rate going the other way? I'm thinking of it as less worry about potentially a disinflation, deflation scenario, but that's just a guess. Anyway, that's all for today. That's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.